Hello and welcome back to another video. It's Declan here. I'm just going to talk today about the Federal Reserve meeting. It concluded on last Wednesday. It was a two-day meeting, and the Federal Reserve have decided to raise their interest rates. I just have an article here. Yeah, it's been raised by 0.75%. Officials agreed to a 0.75 percentage point rate rise at their two-day meeting that concluded on Wednesday, which will increase the Fed's benchmark federal funds rate to a range of 1.5 and 1.75. Yeah, this is the highest rate since 1994, but the markets had factored in this, and they see it's in to try and slow the economy and get inflation back on track, and that's the main reason that they have the increase by 0.75. They have said they will more than likely increase it by possibly 3% as the year goes on. That's not a definite yet, but the markets see this as the Fed trying to curb inflation and rather get ahead of it rather than behind it. So this caused, after Wednesday, a lot of the technology stocks to go up quite a bit and improve things, because due to there's been so much volatility due to so much uncertainty about inflation and monetary policy. But because there's a bit of guidance on it now, the markets have a more clear direction at the moment. Now things are still volatile, don't get me wrong, but there's a bit more clarity. So yeah, there's the Nasdaq and the S&P and the Dow Jones, they all rallied. I just have the chart here in front of me. After this announcement, let me see. Yeah, markets were pricing in a federal Fed that was trying to get in front of the curve rather than behind the curve on inflation. So that's why there was a bit more confidence than previously. So what does this conclude with now? Yeah, as I said, gold prices gain after Fed rates. It had a mixed overall impact on the markets. Some went up and some went down. Now there has been, as I said, there is fluctuation still at the moment, and like my Facebook, as I said a few days ago, I think it was on my last video, that it had hit my stop loss, and I just stick on my glasses now. Yeah, it had hit my stop loss, and I was dealing with leveraged account, even though it was a small account. So I decided to change brokers. So I'm now with Etoro, and I just have three shares. I have shares in Apple, Costco, and Netflix at the moment. I just wasn't happy with having a leveraged account on a small trading account. If you've traded yourself and you use leverage, let me know what you think. Yeah, there's just too much volatility. Even if you put in €60 in, say, any stock, say Netflix, Facebook, or whatever, and there's fluctuations, say, between 175 to 195, you could be down nearly €55 if you've set your stop loss at 60, and that to me is too much volatility. Whereas with eToro, you if there's a big fluctuation, say Costco, for example, this is just a relative example, went down from 450 to 405, you're still not down a huge amount. You won't be up a huge amount either, but it's a lot more steady because you're not using leverage of, say, 1:4, 1:5, and if you're trading Forex, it could be 1:20, 1:30, which is just crazy. And I'm just happier with the non-leveraged account, and there's not as much volatility. You won't gain or lose as much, and I just feel more comfortable with it. So yeah, I'm with eToro now, and yeah, I'll let you know how things go over the next few months. I won't be making very many trades. As I said, I've shares in Costco, Netflix, and I've shares in Apple, and I'm planning on holding them, see how they go. I'm not using the full amount that I have in the account, because things are volatile at the moment. As I said, the Fed raising the rates by 0.75, caused, yeah, the technology sector to improve, but other sectors to go down. So just err on the side of caution. And yeah, if you like this video, please give it a thumbs up and hit the subscribe button. I'd really appreciate it. Until next time, thanks for watching.